Welcome to the daily update, where I'll go over the action in the market for Tuesday, December 3rd, and we'll see how things look for Wednesday, December 4th. A slight update, but hey, it goes in the books as a positive day. So we hit another new all-time high with the S&P. We also hit another new all-time high with the Nasdaq and the Nasdaq 100. We are seeing growth in the large caps doing well. Semiconductors didn't have an up day, and that's an area we're keeping an eye on. But we're looking good from that perspective. But at the same time, some of our intermediate term indicators are starting to show some weakness. This positive backdrop that we're seeing with the indexes, it's not really carrying through to the broader market. When I say that, I mean the broader part of the S&P 500, and it's not really going over into the NYSE. So we're seeing some potential weakness there that is a bit of a concern. However, one of the smart money indicators that we've been watching, the Chaikin oscillator, it's actually turned back up. And we were concerned about that because in Friday and Monday session, we had an up day with the S&P, but that indicator went down. It actually turned and went back up after Tuesday's session. So, okay, before I get into the video, I want to tell you about quickly the SPX Investing Program. It's up, it's going. Feel free to check that out. There's a link that'll take you to the website. You can send me an email. You get early access to the videos as well. And the daily video is the real foundation of what I do as far as my analysis and commentary. Okay, so right at the open, we had a lower open. It looked like, okay, maybe we're going to see some weakness here. Prices declined right around the S1 level. We actually dropped a little bit below that at 6,037. Then we were able to climb back up to the daily pivot at 6,045. Then we went back down again. We retested S1 again, and then we bounced up off of that. We got back up to the daily pivot and got to the unchanged level. And we were able to get above the unchanged level, and we went positive there, and we closed slightly higher on the day. We were up 0.05%, so virtually unchanged. But like I said, it goes as an up day. We're below average with volume. We still have some major economic reports coming out as the week starts to come into midweek and then later in the week as well. We are positive in the short, intermediate, and long term. There are some concerns, but you'll find that there is always something to be concerned about. When I get nervous is when there's nothing to be concerned about. When everything is firing green and we're looking really positive, that's usually about the time things start to end. So the market likes to climb a wall of worry, and I've seen that true decade after decade of watching this. And we'll get some more information that could feed into our overall scenario that'll feed into inflation and interest rates. And then we got all kinds of crazy geopolitical things going on right now. A couple that I don't even have on the list here. Well, I do. I have Syria right here, but then South Korea declared martial law only to have that not happen. So, yeah, there's a lot of unsteadiness. There's threats between North Korea and South Korea, and but the market is just not really paying attention to these things right now. And plus the usual things, Russia, Ukraine, the things going on in Israel and Iran, and just a real mess all over the place. But here goes the market. It's holding up for the time being anyway, and not really being impacted by these things. Okay, so the S&P, the Nasdaq, and Nasdaq 100 again set new all-time highs. And mega caps and growth outperformed. We didn't see semiconductors doing as well on Tuesday. And the broader market, and as I said, the rest of the S&P, the NYSE, the small caps, of course, they had their nice little run up, so they have to go back now. And we do still have a non-confirmed Hindenburg omen. We still have kind of a long list suggesting good momentum or that we're getting a little extreme with the CMB composite, the Stochk RSI, the Williams percent R, the CCI 14 and 20, stochastics, the RSI short term based on 9 periods, and the 20 period moving average study. That's actually dropping down just a little bit now. Intermediate term, the Sean trend meter, which has been on this list for a while. It was the only thing on the list. And we're actually seeing a little bit of an improvement with the bullish percent index for the S&P, and we're just barely extreme now still with the Nasdaq 100 bullish percent index. No real change to the scenario yet. We're wondering, is the employment situation and all the employment data that's going to be coming out, is that going to change this scenario? The dollar was down, interest rates were up. So we closed at 4.22% with a 10-year yield, where we had been at 4.2%. We're still inverted with the 10 to the 3 month, and we're just close, but we're not quite back to being inverted with the 10 to the 2, so it's still uninverted. We actually came down quite a bit as far as sentiment, even having an up day. We had been at 67. We ended up coming down to 62, but we're still positive. But the context is shifting a little bit more negative now. That's because the broader market was actually weaker. We are, as far as the S&P is concerned, in a positive trend. We're coming above 20. We're coming above the moving average, and the green line is on top. And the bias is positive, even though it was barely an unchanged day, and our momentum continues to be positive as well. Okay, we had the JOLTS job openings. It came in 7.744 million, up from the 7.372 million that we saw last time. So there are more jobs available out there, and that could kind of spook the bond market. And it's like, okay, we're seeing strength in the economy here that might mean that the Fed's not able to come in and cut rates. And here's a look at this chart where when you take all of this together, we had been declining with the job openings that were available. And then boom, we saw this really shoot back up with the latest reading. And that might cause some concerns that the economy is too strong. All right, then looking at Isabel Net and some charts here. We usually see this about once a week. This is the overbought, oversold composite where we're up in the 85 range. Now, yeah, that does signal when we get above 80 that we're looking extreme positive, but we still have more room to go to the upside if the market is able to do that before we get to a really high reading. It's when we get above 90. That's when we get most concerned about this. But anytime we get into this area where it's red, we just want to be aware of that because that might mean that the market's going up a little too far, too fast. This is a little bit of a concern here too, where we're actually seeing the year over year percent change actually going down here with the S&P. I'm not sure why it's doing that because we're actually up with the purple line here, but this shows us going down, and then the ISM manufacturing, that's been coming up. Now it's still below 50, and that's the concerning part that we're showing contraction. And the concern also is that you see how these lines tend to not get very far apart from each other and they tend to go in the same direction. And we're not seeing that now. So does that mean the S&P is going to have to come down in order for the ISM manufacturing to go up? Or some kind of an adjustment along the way to get these lines closer to each other? Then this is also another concern here. U.S. heavy truck sales. It had been holding on pretty well, but we saw a real drop off with this latest reading. And then again, everybody's going to have their speculation. As I mentioned in I think it was yesterday's video, at the end of 2023, it's like, oh yeah, we had a 20% year. There's no way 2024 is going to be 20%. Well, we still have some time left, but it's looking like 2024 is going to be pretty positive. And now people are saying, well, of course, 2025 can't do that. So year three returns show significant return dispersion. Okay, that's kind of interesting. Where when we go out here, because we're starting into the third year of this bull market, and this is typically when things slow down. But I remember a year ago, 2 years ago, they said, well, if we start to bounce back up here, we're probably just going to chop sideways. There's probably not going to be much price movement. Right. Okay. Yeah. We've seen potentially, well, we saw one 20% year in 2023, potentially another 20% year in 2024. Okay, then equity positioning across the sectors, seeing a lot of money going into staples. That is a little bit of a concern too, since that's more of a defensive area of the market. But then you've got money going into the mega caps and tech, which is usually what you see. A lot of money going into utilities, which again could be more defensive, but because of all the green stuff, This could also be considered more of a growth area as well, since there's so much demand for electricity and financials. And these have been some of the better areas that have been holding up in the market. Now, staples are underperforming the S&P, but you look at them independently by themselves, and they're looking pretty strong there. And then the areas that have seen some weakness are healthcare and materials over here. So these are just how people are positioning themselves according to Deutsche Bank. And then the annual percentage change in the S&P, well, this goes back where we still see positive returns here. This is getting into the dot-com boom and then ultimate bust. It says the dot-com bubble is the only time the S&P 500 has posted three consecutive annual gains above 20%. Okay, well, we'll just have to see. I mean, we have strange things that really haven't happened the way they're happening now in the world, so why not have the stock market act kind of strange too? But maybe in a good way, because for a lot of people, this is like the most positive part of everything going on. The market's going up. The rest of the world seems to be on fire, but hey, at least my retirement and my portfolio, if you're positioned in long positions, is increasing in value. And then Bloomberg consensus of the probability of a recession in the next year, they have it down here. What is that? 25% or so. Now, as I've stated in a few other videos, there are some folks out there that say maybe we're going to get into a recession right after the new administration comes in. We don't know that for sure, but I keep an eye on those charts. We do have charts that are causing us some concern that suggest we might go into a recession, but we have other charts that suggest that we won't. We'll just keep an eye on things and then evaluate them as we get the data available to us. Didn't spend any time on Twitter. It's all about the presidential pardon and cabinet appointments and or at least nominations and things like that. And so I didn't really find anything of value there. So looking at our intraday chart, we did have a lower open. It really didn't gap down that much. It was pretty much flat, but then we saw selling, which took us down to this S1 area now. We bounced up, came back up to the daily pivot, only to go right back down again, only to come right back up again. Then we drifted between the daily pivot and the unchanged level. And later in the day, we did end up going positive, and then we closed up slightly on the day. And no real change in the initial overnight session over here. We were pretty much flat with the futures in the initial overnight session going into Tuesday, and then not much of a change. So most of the action ended up happening within the cash session itself. This is encouraging and a little bit of an improvement that we're seeing here where the blue line's above the red line, where growth on an intraday basis, the blue line's going up, value is actually going down. Now, it'd be better if they were both going up. We're seeing some weakness in value now, where for a while we were seeing value outperforming growth. And this is also improving where we were coming down and we were getting a little bit concerned about this. Now the growth to value ratio intraday for the S&P is really showing an improvement as the mega caps and large caps are outperforming the rest of the market. So we were up with growth where we were down with value. We're also down, but down less with the mid caps and down, but down less with the small cap growth. So here's our end of day chart showing a little bit of an improvement here with the small cap growth to value, mid cap growth to value improving a little bit more and going up, but not really breaking out, but still positive in the longer term with S&P growth to value. And coming back up out of the rainbow again here when we compare the growth to value ETF. So this is what we like to see here. And we're also looking good with discretionary to staples. This ratio is looking quite good. At the same time, large cap growth is setting another new all-time high here. The condition of the trend, this is what I talk about when we're above the moving average, even though it's really hard to see. There is a moving average on here, and we're above it, and we're above 20. So that's a strengthening trend that now is actually trending out of after coming out of a non-trending environment. The green line came down a little bit, but it's still on top. That's why we say the trend is positive. Here's the short term also going above 20, going above the moving average with the green line on top. Volume continues to drop off and is below average. And we are declining now with the VIX. We're getting down to a much lower reading with the line chart and the bar chart. And the VIX of the VIX is also kind of chopping sideways right now. It's not really declining the way the VIX is. The momentum of the VIX continues to be down, which is positive, and the seasonality tends to be down, which is also positive for stocks, but we're just getting an even higher reading here with the skew index. So as I've been saying here, we're not really sure what this means, an up move or a down move. It's just the market is expecting something and it hasn't happened yet. So maybe it'll be the employment situation report and the employment data that's coming out that will finally get the market to move in the direction, in some kind of a direction here. And we were up with this fear gauge. We were up with this other fear gauge. So that's contradicting a little bit of the decline that we've seen in the VIX lately. And we're down with the daily chart of the equity put call ratio. And we're still going up though with the 5-day chart. And here's a longer term look at the 5-day chart. And we're still ticking up slightly with the 10-day chart. And that tends to be slightly positive, but we're not seeing a real big move at this time. We're also seeing out 30 days that the volatility risk premium is not really showing an awful lot of fear currently. And we came down with the advanced decline line based on price. Now, again, you have the S&P setting a new all-time high, just minuscule. But to see this going down when we're setting an all-time high, a little bit of a concern. And we also declined a little bit here based on volume. But overall, we're still looking positive. And we saw a real drop off in the new highs over what we've seen recently, but a little bit of an increase from Monday to Tuesday after Monday with the new highs. Really no expansion of the new lows. So we're going up with the 5-day and we're pretty much flat now with the 10-day chart. And going down, but still positive with the advanced decline ratio. Still looking positive here, possibly getting a little far away from the moving average with accumulation distribution. We have a tendency to go back to the moving average when we get too far away, but this is positive. And the Chaikin money flow, it's really screaming now. We were worried. It was just kind of chopping sideways there as we got into the early part of November, and then it just seems to be skyrocketing up with the red line going up as well. So this is positive. Now we want to keep an eye on this too, because it's getting to kind of a high reading. Now there's really no set value to say, okay, it's gone too high and it must go down now. But we kind of get into an area where it starts to look overextended, but we're not quite there yet. This is what we're seeing more of an improvement here with the Chaikin oscillator. It had declined even though we were going up with the S&P. Now it's starting to turn back up. So that's more positive that way. And we're seeing an improvement here with the vortex. The green line's going up and the red line's declining. But when you look at the cumulative advanced decline line for the S&P, we declined based on price and we declined just a little bit here based on volume, even though the S&P was up. And we're seeing a little bit of a disconnect here with the S&P going up. That's the bar chart setting a new all-time high, but the NYSE advanced decline line did come down. And I haven't shown this in a while. This is longer term and this is positive. This is the 10-day average of the highs and lows for the S&P. We're coming back above this green line now where we spent most of 2024. We dropped down below that as we saw some sideways and even weakness after the election run up that we saw. We're coming back up now. And so this is longer term positive. And we declined a little bit with the cumulative advanced decline line for the NYSE. And we're also declining just a little bit here with the regular advanced decline line. Also, this other advanced decline line is declining, but still looking good. We're well above the moving average. Both moving averages are going up. And a bit of a decline here with the common stock based on price and volume for the NYSE. And a little bit of weakness here. The advanced decline line going down with the NYSE common stock, even the S&P, as we pointed out before, the mid caps and the small caps. So that's just showing more broad market weakness. And we're coming down with those stocks above their 20-period moving averages. We had been extreme here, but we're starting to pull back a little bit, showing that the momentum is slowing down. Also coming down, but we're still above 70 here. That's why I still have this one on the list at the beginning, because we're still above this 70 level, suggesting that short-term momentum, although not really going real strong right now and showing a little bit of weakness, it's still giving us a high reading. And we declined, but still positive with the 50-day moving average study, the 100-day moving average study, and the 200-day moving average study. And below average with volume here, and coming out and setting a new all-time high. You know, that's pretty positive in and of itself. But we're declining with the 20, 50, and rolling over a little bit with the 200-day moving averages of the S&P. But when you look at our short-term indicators, the Stochk RSI is still extreme, as is the Williams percent R. CCI 14 is above this line, and the CCI 20 also above this line, but could still go up further with both of these charts. The stochastics looking extreme in the short, intermediate, and long term. And we're still above the midpoint, even though we declined slightly with the force index. We're still above the green line and the blue line here. So the condition of our short-term trend still looks positive. And we're still above the 20-period simple and exponential moving averages. We're still in the high end of the +2 channel with the standard deviations chart. So we're not extreme there. And we're going back up now with the balance of power. That, after it had been dropping down, it's now starting to turn back up and it's above zero. So that's positive. We're getting back to looking a little more extreme with the CMB composite. The condition of the intermediate term trend, 50 periods, we're still looking solid there. We're still above all the plotted moving averages with all the moving average lines going up. Go no go is still positive with the darker blue bars, still going up with the highest high value chart. This is a bit of a negative divergence here. We're going up with the S&P. The TTM squeeze is going down and turning to a darker shade of blue. And we're bouncing up a little bit more positive with the ease of movement. And we're actually dropping negative now with the S&P. That means the rest of the stocks in the S&P are seeing a little bit more weakness here. This is a concern. Is it a warning sign? We want to be aware of this because since we're dropping below zero, we're starting to roll over based on price and we're flattening out here based on volume. Is this the beginning of something, or is this just something short term while the market is gathering itself before it's getting ready to go back higher? And we're declining, but still positive with the NYSE McClellan oscillator. So we're still going up with the summation index based on price and volume for the NYSE. The Erin is still positive, above zero with the oscillator, showing that the buyers, even though they're coming down, the sellers are also decreasing. So we're getting a positive reading here as well. And this is another warning sign that we've been watching. We're still positive with the Swenlin trading oscillator, but we're declining based on price and volume. Momentum is still positive with the PMO. Also, it's positive based on price and volume, but we're coming down with the PMOs that are rising. This is suggesting some internal weakness developing inside of the S&P. We're also seeing the buy signals declining now, and we're flattening out with the PMOs that are above zero. And this has been kind of strange lately. The slope oscillator, which is our touchiest oscillator, it's actually turning more negative. It's below its moving average, dropping below the green line. But the MACD is still positive. And when we compare these two short-term oscillators, the slope it's going down, but the TSI is still going up. And our three intermediate indicators are going up, and our long-term momentum oscillators are going up as well. So this is kind of the outlier right now, just something we want to be aware of. And another thing that's negative is the Copic curve. It's dropping below its moving average and declining, although it is kind of flattening out here. And then the Sean trend meter is giving us an extreme positive reading. We're flat, but above 50 with the money flow. Still declining, but above 50 with the ultimate oscillator. Unbalanced volume just continues to go up. And then I like to mention this every once in a while. This is one of the first technical analysis indicators. It was developed, I think, back in the 60s by Joseph Granville. And the shortcoming with this is that if we have a positive day, all the volume is considered positive. If we have a negative day, all the volume is considered negative. And so I don't really like this indicator in and of itself. It's just that a lot of the indicators that you see through the video that I use, they're derived from unbalanced volume. So it's good just to keep an eye on what's going on here. And the Pring bottom fisher is still just firing away, giving us a buy signal with this. And we're still looking good here with the RSI 14, still just barely extreme with the RSI 9, the short term. We're still positive with the Elder's Impulse system for the S&P, and we're positive with the parabolic SAR. And we're going back up. We ticked back up. We were a little bit concerned after Monday because the BPI actually declined with the S&P going up. Well, even though the S&P went up, we saw the BPI actually tick up as well. So that's clicking back a little more positive that way. Came down just a little bit, but still looking positive with the NYSE bullish percent index, and coming down, but just barely extreme here with the NASDAQ 100 bullish percent index. And we want to keep an eye on this long-term trend channel. Going back to 2009, we're hitting the upper end of this line. We're wondering if that's going to mean something. And we look at the trend though, with the Heiken Ashi, we are still positive. We're positive with the Kigi chart, positive with the Renko chart, and positive with the three-line break chart. And I didn't show the long-term chart. There's really not much of a change there. We're still positive on all time frames with the different indexes looking at the Keller market model. This no changes here either. Still negative in the intermediate term with bonds based on price, and commodities are still under pressure on all time frames. And this is encouraging, though. We had communication and tech. Those are the two main growth areas, and they were up on the day. It would have been nice if discretionary was up as well, but it wasn't down all that much. But these are the more growth areas, and this is why we saw a new all-time high, just barely, with the S&P 500. And so we're seeing the euro's seeing a little bit of strength here compared to the dollar. We have the S&P setting an all-time high. And then after going above 105, well, the euro crossed back below it. Just can't make up its mind. And then we have the Nasdaq looking pretty good now with a new 4-year high going above 19.3, then 19.4. We have discretionary having a BPI cross below 80, being above 80 and going up. That's good, and that's showing strength. Crossing below 80 might be a little bit of a concern. And here we're seeing a little bit of a disconnect here between the weighted and equal weighted version of the S&P. We went up and set a new high with the bar chart, where we're actually declining here with the equal weight version of the S&P. So we're setting a new all-time high with the S&P, and that's also being confirmed by the Nasdaq. That's a little broader take on new Dow theory. A little more of a breakdown here shows us that we're not quite at a new all-time high with the equal weight, but we are setting a new all-time high with the QQQ equal weight. The Dow is down a little bit here, still neutral with the Elder's Impulse system, and we're still going up here with the Nasdaq setting another new all-time high, and the Nasdaq 100 is also setting another new all-time high. We are positive with the Elder's Impulse system for the Qs, and the momentum is turning back to positive now for the Nasdaq 100. So that's a good sign there. And of course, we zip up with small caps and then chop our way back lower here. That seems to be the way things happen over the last year or so. Excuse me. And with the Russell 2000 small caps, still above 50, but declining with the RSI, and the momentum rolling over here, but still positive. And we're still neutral with the small caps and looking at the Elder's Impulse system. The mid caps just kind of just kind of drifting, I would say, a little bit lower here. And they continue to be neutral with the Elder's Impulse system. And not, I guess it's setting an all-time high here with the Wilshire. I mean, it was up 0.01%. We set an all-time high after Monday, so I guess any kind of a gain would be another new all-time high here. We were actually down 0.01% with the total U.S. stock ETF, and setting an all-time high here with the FANG index. That's nice. These are the large caps, the mega caps, the Facebook, Apple, Amazon, Netflix, Google, Nvidia. That's where the strength is coming from right now, and this is kind of going back to what we saw last summer. And the financial sector, seeing a little bit more profit taking here, but just coming off of setting an all-time high. Apple was up 1.28%, setting an all-time high there. Seeing a bit of a bounce here, but only up 0.05% with Microsoft. Amazon was up 1.3%. We have Google was down 0.09%. Meta really shot up over 3.5%, setting another new all-time high. Nvidia was up 1.18%, still sticking around its 50-day moving average. Tesla, and there's this thing going back and forth, and of course there's a debate that goes with it, that Elon Musk he wanted this big payout or something, and it's a company that he owns and he has shareholders, and they said, yeah, you can have this big payout. And then some kind of a judge came in and said, no, you can't do that. And it's like, okay, who controls the company? I thought it was the shareholders that control the company. But so this is creating a little bit of pressure these days. And of course, the media loves this. You know, anytime, look at all the money Elon Musk is losing. You know, they like to make fun of, the richest people in the world. But that's kind of what pressured Tesla a little bit. If you saw some follow through in there because of that news. Netflix coming back up, but not quite setting an all-time high yet. And then The world stock, and we're kind of seeing a little shift here when we compare US stocks to the world stocks. It had been improving in the short term. Now that's flattening out. And we had been declining in the longer term. Now that's starting to turn up. Yeah, kind of strange there. And oil is going back up a little bit. Some of this could be having to do with what's going on in Syria. That's a really crazy situation where, from the US perspective, there's really no good side to all of that. It's like, okay, which side are we going to help out here? The least evil? So there's not really any good, real alternatives in that area. And that's kind of why there are troops over there, but that's why we kind of stayed out of that because it's like, who do we support? We might end up actually supporting our enemy in that whole process. Complicated. And we were down 0.57% with the semiconductors still underneath the moving averages, still seeing a recent death cross here. This is a concern to us. We want this to get back up here to keep things more positive. But we are improving here. But if we really start to fall down here, that's going to really put some pressure on the market. And we're keeping an eye on the ratio between semiconductors and the Dow. This has been falling back down. It came back up a little bit in Monday's session, but this going down is a bit of a concern that we're just watching. And dollars in an uptrend now, even though it was down slightly on Tuesday. And we were up with the 10-year. We're coming back above the 200-day moving average with the 10-year yield. And we're coming back down below the 50-day moving average with the 10-year based on price. And this is encouraging, though. The growth to value ratios are improving with the Qs to S&P, with the discretionary to S&P, and large cap growth is outperforming large cap value right now. And we're seeing an improvement with the large caps, mid caps, and small caps. So that's under the surface could be positive. But we're also concerned about these weaker areas that are starting to develop at the same time. So we are still positive, and we do have, for the most part, positive seasonality. We're going to get the MBNA Mortgage Applications Index. We get that every week. The ADP Employment Change and the ISM Non-Manufacturing. That's a big one there. And then all the crazy stuff that's going on in the world, if that'll even have an impact. And then Thursday, we're going to get jobless claims. Friday's going to be the employment situation report. And then one thing to be aware of is Chair Powell is going to be speaking on Wednesday. And that's the one to kind of pay attention to because that can impact the markets. Where the other federal open mouth committee people, they just talk because they think they're important. Well, they are important, but sometimes maybe a little unjustifiably so. I mean, these are economists. It's not like they're rock stars, okay? But when Chair Powell speaks, since that's the chairperson of the Fed, we want to at least see it's that going to rattle the markets. Seasonality, neutral to positive with the Dow, where we're neutral to negative with the S&P, and we're also neutral to positive with the Nasdaq. Really no edge going back to 2002, one way or the other. Slightly positive, slightly negative. And here's another chart here. Stocks up 5% in November is a good sign. Well, how could it be a bad sign? But this just means December tends to be up here. We're up 72.7% of the time with a 7.7% return. And December also is the least worst month of the year going back to 1928. Here's a look at how things are shaping here. We do see some positive seasonality, and we get a few days now before about the 9th or 10th. That's when we might see some negative seasonality coming in here. And this I've been pointing out for a while now. We're in that period of positive time, both with the S&P and with the small caps. And we're just continuing to outperform all the different averages of what's been happening in 2024. Wednesday in 2023 was actually the most negative day of the week, and it's positive, but it's kind of in the middle here as far as positive in 2024. We also are still looking at positive seasonality going out into the new year, and this is how things often react after the election. This is how things reacted after the 2020 election. So the warning signs, we're still going up with the 5-day and 10-day equity put call ratios. This is a new addition to the list here. The S&P McClellan Oscillator and Summation Index. We've dropped below zero with the McClellan Oscillator, so we're starting to turn down with the Summation Index. The Copic curve is negative, and we do have a non-confirmed Hindenburg-Omen, which is negative, but just kind of lingering in the background now. And then the positive sign. The smart money indicators are actually looking pretty good right now. Maybe a little extreme with accumulation distribution. The chicken money flow is now really just going fast. So we want to keep an eye that it doesn't go up too fast. But the chicken oscillator, after giving us a concern for a couple of days, is now showing an improvement. And the NYSE McClellan oscillator and summation index, that's still positive, even though it did decline. And we're going down here with the Swenlin trading oscillator, but we're still positive. The vortex is positive. We're still looking good here with growth to value and discretionary to staples. That's encouraging. Our oscillators are positive, but we see the slope oscillator is actually declining below its moving average. And the advanced decline lines are weakening there. And then our 20, 50, 100, and 200 period moving average studies. Even though there was decline pretty much across the board with all of these moving averages, they're still positive. And the parabolic SAR is positive. We're positive with the bullish percent index and actually ticking back up with the S&P, coming down but still extreme with the Nasdaq 100. But the NYSE BPI is still looking pretty solid there. Ease of movement, money flow, and ultimate oscillator. I treat these as secondary indicators. They are still positive, even though some are showing a decline. And we have crossed over positive with the momentum with the NASDAQ 100 and the financial sector. Even though it's been seeing some profit taking over the last few sessions, it's still looking pretty solid there. And then just an update here of the chart. No additional confirmation yet. So our conclusion, we are positive. We're still at the beginning stage of a new positive trend. Can it stay that way? Is it going to stay positive? Is the green line going to stay on top? We're also in a period of positive seasonality, but we see some weakness developing. Now, one thing that's encouraging, the weakness that I was kind of latching on after Monday, that's kind of being dealt with to a degree. And now we're seeing different areas of weakness. Okay, so it doesn't mean that everything is turning negative. We just want to know about these things before they happen. We can plan for them. If we see this weakness really start to grow, then that's when we start to shift our overall attitude about what's happening in the market. That's why I show so many charts. Okay, in the short term, we're positive with a new trend, and we do have positive seasonality there. This is where we're seeing more of the weakness. Even in the intermediate term, we are still positive with a new trend, but we're a little bit concerned there. But we're still looking positive here in the long term. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.